right, folks, welcome back to the Short Vol Show. My name is David Lincoln, and we at the Short Vol Show are here for you. Forget me making money or my positions or anything to do with me. This isn't about me. This is about you and you guys making money, you guys being successful. Now, a lot of podcasts I've been watching lately have the craft beer of the week, and they try to be cool. Like a bunch of these true crime podcasts. Now, I love true crime, but I watch them for the true crime. I want the gritty details. These guys, a lot of these true crime things, either they're comedians and they're making jokes or talking to each other the whole time, or they trying to sell you beer. And I don't drink. So this guy's like, craft beer of the week. You get to talk about craft beer and true crime. I'm like, I don't want to talk about craft beer. So I figured I'd have a gimmick of my own. And my gimmick is going to be the guitar of the video. So each video at the end, and you can turn it off if you don't want to watch it, but at the very end, I'm going to talk about one guitar, and we're going to learn about a guitar. And I'm going to find a guitar that's actually for sale that you could buy, and I'm going to talk about it because it's fun. All right, so I've got my Thanksgiving friends gathered around me here, and as I said, this show is for you. So let's go to your comments and questions and see what we find. All right, so I'm pulling up StockTwits here. Let's see. Jabba the Hutt, or Jabba Hutt. Jabba Hutt says, Famous Dave, liked your video. I liked through 15th minute. I think he means my video. Liked through 15th minute. MNK is back up. I try to stay away from politics as much as possible. Now, I knew that was wrong to get involved with talking about politics. It always turns everybody off. I can't help myself sometimes, but I got to try. Keep it up. It would be nice to get some insight/education from you on why VIX Contango is so high. Or anything else, or anything that helps enlighten the volatility world. That's a good question. Why is Contango so high? First of all, what is Contango? Some people might ask that. It's very simple. It's a fancy word. It always sounded like impetigo to me, or something like some weird disease that, if you kiss some dirty girl, you're going to get it, these spots popping up on your chin or something. But no, that's not what it is. Contango is just the state of the shape. It basically has to do with the relationship between different futures. So if you've got futures on anything and they expire in different months, if as you go out in time, the futures become higher and higher price. So as the months go out in time, the futures are higher and higher prices. So for example, this month's 5, next month's 7, next month's 9. If that was the structure of the way futures are, and we would call that the term structure, the shape of how different futures in anything, in something, relate to each other, we call the term structure. And if the term structure is in the shape that as you move out in time, futures are higher and higher in price, that's called being in a contango shape. Now, being in a contango shape happens in oil futures. Now, the thing with the oil futures is that, and a lot of things like agricultural futures are used a lot by farmers to sort of hedge, to lock in a good price for their crops or hedge against prices going worse. And we traders like to make jokes about oil or farm futures because you can actually take delivery of the futures, which means that if you own a bunch of coffee futures, some guy can just pull up a silo full of coffee and drop it off in your backyard if you really want him to. And so we always joke about taking actual physical delivery of futures. And real farmers, they might actually want to do that. You might have Archer's Daniels ADM, Archer's Daniel Midland. I'm not sure if the plurals are right on that company. But you might have ADM drop off a bunch of bushels of corn. But Archer Daniels Midland. But this situation is unique for VIX products. And one of the reasons why a contango situation is unique for VIX products is that the prices of VIX futures can stray far away from the actual price of the VIX. When you have the actual price of something and then you have futures on it, we as traders, like to refer to the actual price in a number of different ways. It can get confusing. Some people call it the cash. Some people call it the spot. And I guess those are the two main ones people call it. Or they'll just call it the VIX. So you've got the VIX. And this is the same with like the S&P futures too. You might say S&P's cash is trading here. S&P futures are trading at a premium to cash. And so with something like the S&P, you have what's called an arbitrage situation, where there's a sort of a direct arbitrage. And what I mean by that is that you can come up with you can go out in the market and buy the individual stocks that make up the S&P in such a ratio to each other that you can replicate what the S&P currently that number that the S&P currently is, and you can replicate that number to the extent where if futures are a lot higher than that number, you could actually go out there, buy the appropriate amount of each stock in the S&P, sell futures against it, and those two things would converge and you would actually make money. And in fact, the futures and the S&P spot, remember that we just talked about that, spot or cash price, they stay pretty well in line, because if they start to move out of line, people come into the market and they buy one and sell the other to take advantage of that arbitrage opportunity in between the two. Now, with the VIX, there is no arbitrage opportunity, because there's no way to like go out in the market and actually buy the VIX, because the VIX is just based on this formula. It's sort of an esoteric concept that's based on this formula, and there's no way to directly go in and buy the VIX. So futures can just kind of move all around all over the place. Now, the one thing they have to do is on expiration, they gotta come and converge with that VIX price, that spot. On expiration, they're going to come in and converge with it. But anytime before expiration, they can just bounce all over the place. And this creates opportunities for us. So let's get back to this person's question. Why are we in such steep contango right now? And indeed, we are in steep contango right now. I can pull up something to prove that to you by going to VIX Central. So let's get rid of our cute, cuddly little Thanksgiving animals here, and let's go to VIX Central. All right. And I'm going to get out of the way here too. So if we go to VIX Central, we can see right now we're in 15% contango. You can see at the bottom it says contango 15%. And can you see that? Let's see if this display is centered right. I think you can see that. And two, we are historically, and so this is historically a pretty steep contango. And I'm going to illustrate that to you now by going to this contango tab. And I'm going to isolate just the chart that has F1 to F2 contango. Now the reason I'm isolating this is this F1 to F2, those are the only 2 months that matter in the calculation for VXX or UVXY. None of the other months really matter. Now, they might matter in your head of like trying to calculate what's going to go on moving forward, but as far as like the pricing and the movement of the actual pricing and mechanics of movement of the ETPs, VXX, UVXY, SVXY, TVIX, only the first 2 month futures come into play. So what I'm going to do is I'm going to isolate the last just this year. And you can see anything above this red line in this chart here. This chart right now is showing contango. Anything above the red line is in contango. And the higher above the red line, the more in contango things are. The lower below the red line, that's in backwardation. And that's the opposite. That's when the front month future is higher than the second month future. And as I'm saying, for the purposes of this particular calculation, we're only worried about the first 2 months. However, as it turns out right now, if you look back at the chart, you can see that currently there is a contango relationship between month 2 and 3 also of 7%, and of 3 and 4, between 3 and 4 of 1.43%. between 4 and 5 of 2%, 5 and 6, and so on and so forth. There's contango between all the months right now. But we are pretty much only concerned with month 1 and 2. Now, we will start looking past month 1 and 2 to between month 2 and 3 as we get close to expiration. But right now, we're not even close to halfway through expiration. So we're not worried about that relationship at all. And when we look on this chart of contango, we see that we are historically in a high spot here. You can see that if you look at this chart of just this year, it looks like the average contango is somewhere around, let's say, I don't know, 8 to 10%. But right now, we're up around 15%, and you can see it's up here. Now, to find out why that is the case, we have to go into the psychology of what futures traders are thinking. We got to get into the futures traders' minds. And that isn't all that it might sound hard to get into someone's mind, but it's not that hard to do. If we think about the forces that are acting on these futures. Now, everything that's in the market conspires to make something worth a certain price. When Apple is trading 212, that's because everything in the market, everybody's input in the world says that that's what the price should be. Same with VIX futures. Every input says that the VIX futures should be way higher than the spot price right now. And why is that? Well, one reason, the spot price, you could think of it as the spot price being pulled down or the VIX futures being held up. Spot price is being pulled down by the fact that the S&P is not moving around a lot right now. So if anybody owns options in the SPX right now, if they own, let's say, strangles or straddles or whatever options they own, they're not doing too well. Maybe if you own, I don't know, some deep calls or something, maybe just because we're rallying, those are working a little bit, but nothing on the whole, in the sum total of everything, all options in the S&P, they aren't working very well to own them because the thing is just slowly rallying. And in fact, if you look at realized volatility of the S&P, it's very low right now. So this is pulling the VIX, actual VIX spot down. However, the futures guys, they're not so sold on the fact that that the volatility, the VIX should be 1175, which is where it went out on Friday. The futures guys are kind of like, wait a second, we've got all this stuff going on. We've got, impeachment stuff going on. We've got uncertainty about the deals with China. We've got reports coming out that say that spending is out of control, the deficit's out of control. We've got uncertainty about the elections coming up. We've got all kinds of uncertainty. We've got, constant articles about how there's going to be a recession. We know this rally's long in the teeth, and all of these things make people nervous, and it makes it so that the sum total of futures traders don't want to sell the futures way down to like 11 because, let's put it this way. There could be a spike. People are, there is a spike pretty much every 3 months, sooner or later. And nobody wants to be caught short for a spike or caught, they don't want to chase volatility down, way down in the hole. Did you ever watch that show The Wire, the opening song for The Wire? Gonna chase the devil back way down in the hole. Nobody wants to chase the futures down in the hole. They'd feel comfortable with keeping a little distance between spot and the futures. And that makes sense day to day. And, these things are priced day to day. But the effect over the medium to long term is devastating to VXX, UVXY, TVIX, and whatnot. Day to day, it makes sense that the futures should be in this structure. And we see, indeed, that there's a lot of space still between spot and the front month future. Now, yes, we're not anywhere close to expiration, but still $2, more than $2 between the spot and the front month future is a pretty wide area. Now, yes, on expiration, we have seen it many times around $2, but we are a week past expiration now, and we're still it's 230 right now. There's $2.30, or I'm sorry, it's showing us 217. It shows the difference. I'm sorry. All right, so the roll yield right now, so the difference between spot and the front month future is 230. The difference between the first month future and the second month future is 217. So that means the difference between the second month future and the roll yield is 240 plus 217. So that's 457, right? So there's a lot of space between that Jan future and spot. And so it makes sense rationally if you think about it that they would keep these futures higher, because they're like, we're not going to get suckered into chasing this stuff down here, because we know as soon as we're selling futures, who wants to sell a future like a 12 VIX future, and then you turn around tomorrow and something happens and the stuff pops back to 20? Nobody really wants to do that. So they keep the futures higher than spot is. And while this makes sense in the short term, it is devastating for VXX, UVXY, TVIX, etc., because as they keep these futures in this steep contango, and as time goes by and these products rebalance, this contango of over 10% is once again devastating to the value of UVXY, TVIX, etc. Now, the economy in general doesn't really care about the value of VXX, TVIX, UVXY. There's people care much more about, not these VIX futures and the SPX than they do about what the price of TVIX is tomorrow, or what the price of VXX or UVXY is. So they'd much rather keep these futures up high and away from spot, because it gives them room to breathe if there is a spike. If there's a spike, somebody can turn around and say to their boss, yeah, I'm short the VIX at 16. I'm short some Jan futures, which is basically short the VIX at over 16. That's much better to say to your boss if there's a spike. If the VIX spikes from 1175 to 14, it's much better to tell your boss, yeah, I'm short these Jan futures at 16, than to say, yeah, I sold them at 1175, and then you spike. So these prices in the futures make sense right now. And when you see contango that's very steep like that, you can say to yourself, well, probably the market is at some highs and it's probably rallying right now, because this is the shape that the term structure takes when it's rallying right now. In another way of thinking of it is that this is a perfectly fair shape. It's fair to the shorts because they're going to make money in decay, and it's fair to it's fair to the guys that are short the future, or short the futures. Anybody who sells these Jan futures to somebody, they don't want to buy this stuff, but they don't want to sell it either, because if there's a spike, you could get devastated if you were to sell the stuff in the hole. So we as traders, this is the biggest thing I want to impress on you, and it's a symptom of the world we are in today. The world we're in today is a world where we want instant results, and we want to put a trade on for earnings, and then X, Y, or Z happens in earnings, and you make X amount of money today on earnings. We want to put something on and have it happen right away. And the nature of the stock market is that stuff doesn't happen right away. And you've got to come up with strategies that are longer term strategies, and you have to control your emotions and your strategizing so that your strategy doesn't switch every day based on your mood or on what's going on in your life and this sort of thing. And that might sound obvious to you, but in practice, for somebody who's not used to trading, it's much harder to think about, because when the rest of your life is minute to minute action and you're making decisions and you're doing this and that and the other thing, to have this longer term horizon in just one area of your life in trading, and to slowly, strategically make decisions and slowly, strategically make adjustments over a longer period of time, it can be a hard thing to focus in on. And it can be something that's rewards. You don't get instant stimulus back to you when you're trading a longer term strategy. And so, people want to play a video game and have instant feedback and, do stuff today, get stuff done today, make stuff happen, all this kind of stuff. But trading and being successful as an investor, which is a little bit different thing than trading, but it's similar, are not activities that happen minute-to-minute excitement and minute-to-minute adjustment. Minute-to-minute, every adjustment you make is going to cost you in some way. With options trading and commissions and whatnot. And you might say, oh, well, stock commissions are zero right now. But still, adjusting over and over again all the time is going to cost you. And certainly if you're pursuing a strategy that has to do with the VIX, it's going to cost you. Reports have been coming in that many people who are the so-called experts in this industry and who are selling to investors products and who are billing themselves as VIX experts and are people in the space who are representing customer money using VIX strategies. There's lots of rumors that people haven't been doing that well this year. And that seems shocking to me because look at the move. I mean, we've had just the perfect move down in these VIX products. And to me, it's like, how could that be that people haven't made money when the strategy, it seems obvious that a strategy, when you look at a product that looks like this, it seems obviously a strategy at some point. You don't have to be a genius to go, maybe I should short this. Right? Is that going too far out on a limb to say, maybe I should short this? And if it pops in at the end of July, you might say, well, maybe it's going to turn around and go back down again at some point. And maybe if I'm patient and craft a strategy that will give me enough time to weather the little mini spikes, I should be successful. And certainly this year has a beautiful curve, right? Some other years you would have gotten chopped up. Let's go back 3 years. Okay. Yeah. In this year, last year you would have gotten chopped up a bit, right? You short this stuff. You make, let's say you short it in April, all right? You're making money April, May, June, July, August, you're making money, and boom, you're going to give some of it back because of the spike into October. But this year, look, it's straight downhill. So how is it that a bunch of people who make it their business to trade the VIX have lost money? I don't know the answer to that. I'm just going to put that question out there, I guess, to you. All right, so I've put on a kind of a controversial position, or at least a different position than I usually put on, and I want your input onto it. Now, the sample position that I put on here does change a little bit more than your positions might, and part of that is that I want to illustrate different ways to trade the VIX to you. But let's take a look at the position right now that we have on in VXX, and you can tell me what you think of it. Okay, so here's the position. I guess I can kind of try to zoom in on it here. And let's see if we can do that. All right. So there you go. There you have it. And if I go to the Analyze tab, we can do an even better job maybe. So Analyze tab. Okay. So let's go back to the Trade tab. Okay. So you can see the net position. I'm long. Now I rolled my position out to September. Okay. September is very far from now, right? So we're giving ourselves lots of time. So rolled out to September, that's 295 days from today. Okay, so that's almost a year out. And I've turned, so, I had a position that was like 40 units. Okay, I traded those 40 units for essentially 170 units, right? So I had these things that were, each one was worth a lot. I changed them for a bunch of smaller things. Each are worth a teeny bit. And I went all the way down to the 10 and 8 strike. Okay. VXX is 16 right now. So the 10 and 8 strike, the 8 strike is 50% away from where we are right now, okay? But the options I bought there were only for 30 cents. So $30 a piece. So I changed options that were $200 a piece for $30 a piece. And we're going to see if this thing, if we stay up in this decay, it's very unlikely that we'll stay in 15% contango for very long. But if we can just stay here for like a month or two, VXX is going to get destroyed. And this is kind of what I would call a cheap shot, buying something for 30 cents, okay? And when you start with something that's 30 cents, you're worrying about theta, or how much it's going to decay per day. Okay, you've got 300 days, and the thing's only worth 30 cents. So what's that? So $30 divided by 300 days. Okay, so it's like decaying by, what, 10 cents a day? Each one's decaying 10 cents a day. So we'll see what happens. So the beauty of this position is, yeah, we can have tons of spikes between now and 300 days from now, and this still be worthwhile. Now, this isn't as great as if this was UVXY. UVXY, the more spikes you have, it actually makes it decay more, because you've got that rebalancing thing going on with a leveraged ETP. This VXX is not leveraged. However, the decay over 300 days, if it stays anywhere near where it is, this position will be devastating. If Contango goes to half of what it is, this position still has a fighting chance. But it's the kind of thing, it's kind of like betting on a parlay, or betting on the over-under and taking the over. If you bet on the over-under and you take the over, and the game scores high in the first half, you can have won your bet way ahead of time. And that's the same thing with a bet like this. With 295 days to go, if we continue to rally and take out the highs for the next 2 or 3 months, this position could already be a winner. But, you know, there's a downside to this too. The downside is, if we spike from here, we're at a very low volatility right now. 1175 is a low spot for the VIX. That's the lowest it's been this year so far. And we could easily pop up off of there, and not, it's very conceivable that we could not make it from 16 down to 10 in the next year. But we'll have to see what happens. I think that this does have a fighting chance, and there are ways to lay off this position. If we get anywhere near there, we can start selling stuff against it to help finance it. So we'll see what happens. Meanwhile, those two little guys that I'd been trading, ACB and MNK, rallied at the last session, so that's good. ACB back up a little bit, 252. I saw some comments on, some people were watching my ACB video from a couple days ago, and MNK also rallied in the last session, was up 21 cents, so that's nice. So those two little guys have come back a little bit. Now, those are kind of long shots. It's kind of rare for me to have, in all aspects of my portfolio, I have sort of like long shot things on right now, which usually I'm on the other way. I have the sure thing things on that pay less. Here I have some long shot things on that pay high. But it's not like I have stuff on that's like negative edge, like I'm buying lottery tickets. I'm not buying lottery tickets. I'm just buying very cheap things. All right, so tell me what you think of that. And meanwhile, I'm going to go now to our guitar of the week. And I picked one out. I'm going to go to one of my favorites just right off the bat here. And we'll go to reverb.com. Reverb.com is one of the best places to buy an instrument besides like eBay itself. And we're going to pick, if you knew me, you'd know that this is one of my favorite guitars, the Parker Fly. Not as well known of a guitar as some others, but and I'm going to look at this extremely well. Let's not look at that one. When you're in the market for a Parker Fly, there are these guitars. There's some made still. I think I'm not even sure if they're made anymore, but there was a golden era when Ken Parker had the company and was making them in Massachusetts, and I believe the golden era of Parkers lasted I'm not sure if it made it past the year 2000. I'm not exactly sure when it ended, but it was sometime around the year 2000. So here we have, so what we have is the pre when Ken Parker sold the company, and we have the company's been sold a couple times. It was sold to Washburn, and I think a new company owns it now, but it originally was run by Ken Parker. And here is a 1997, which is the period of time when Ken Parker still owned the company. And so this guitar is very interesting because it has what are called active pickups. It has a piezo, which is a acoustic sounding pickup in the bridge. Some people like them, some people don't. This one's a red one. And the neck has this very strong epoxy on it. And what that does is it allows this to be a very thin guitar so that you can get your hands right up to those frets without having a thick neck to deal with. Now, we can tell right off the bat that this is an older one because you see that adjustment. No, I can't see that adjustment because we're all over the place with this video thing here. You see that round adjustment in the middle there. That did not look like that after 99, 2000. That's how you can know it's an older one. And you can see that this has a tremolo, and all these switches here are for the different pickups. This one has 2 pickups and then 1 pickup in the bridge. It's a very, very light guitar. I mean, the thing is like, I think it's like 4 pounds, something like that. Parker Fly Deluxe. Beautiful guitar. Now, this one's $1,500, but that's a pretty good price for one of these. And if you get one of these, you want to get the earlier ones because that's when Ken Parker was making them. And they did certain things to make them cheaper later on. Now, you can actually go to a website, and it will only take you a couple minutes to look this up online. And you can look up the serial number. It's going to tell you what year the guitar is from. The BP, I believe, means that it's poplar, but the serial number will give you all kinds of interesting information about the guitar. So this looks like a good one here. The other good one that I liked on here was this Supreme. Now this is a little bit later one, but unique color here, this 2013 Supreme. However, $4,000 for this one is kind of steep, so I don't know if you want to go after that one. Let me just change this screen so you can see it a little better. Fit the screen. Okay. So this one listed at $4,000. That seems a little expensive. I mean, there's a lot of awesome guitars you can get for $4,000 besides this one. But that is a unique color. You'll notice that the unique Parker headstock, this one's a little bit different. The modern ones are a little bit different. You can see how it's got this like little lip here on the edge of the headstock. The first ones didn't have this little lip here. So that's a little bit different. And you can see, as I was talking about before, there is no like adjustment on the bottom here like the earlier ones did. But this is definitely sort of a pretty color, but I don't know if I want to spend an extra $2,000 just for the pretty color. There's one other one that sold, and if you watch really carefully, you can find these that come in really unique custom colors that were special ordered at the time for people, and those are the kind of ones I look for. But there you have it. Parker Fly electric guitar. It's today's guitar of the day. I hope I answered some of your questions about Contango. I believe that we are in a unique time, and there still is time. We know that this was going to spike at some point, so don't be shocked when we get a spike, and we don't know when it's going to come. I can't tell you when it's going to come. In a sense, being short this, you are playing with fire. There is risk involved here being short this, and there's nothing in the market that is a risk-free trade. If you're trading in the market, you're trying to take money away from other people, there's risk involved. Don't be fooled into thinking there's no risk, and don't be shocked when we spike, because it is going to happen sometime. Don't put all your eggs in one basket. However, we are set up in Contango for this stuff to continue to decay heavily. If we don't spike, this stuff is moving lower. The longer we stay at 15% Contango, it's just inevitable that over time that we're moving lower. If we do get a spike, it might be time to jump into these things. But if we do get a big spike and we get a big market sell-off, the term structure could change and we could completely move into like a new era and go back to a situation where these things are not in a good contango shape for a while. So things could change really quickly. But right at this moment, there's opportunity to the short side still, in my opinion. All right, so go back to your turkey. Enjoy the rest of, actually, it's not even the weekend. It feels like it's the weekend right now, but it's not the weekend at all. We've got trading tomorrow. Now, tomorrow is only a half day, so remember that. Everything ends at 1 o'clock. But there's opportunity out there, folks. And if you want, go out in September and buy some September premium. Let's pop it up. It's like, now I think I'm the only open interest in the September 8 put. So it's a pump and dump thing now. Now that I'm in, I want you guys to all pump it up so that my position will work. No, I'm just kidding. Do what's best for you. I want you guys to make money. There's nothing that's better for my channel than a bunch of people making money. Tell their friends. They all subscribe. Everybody makes money. Everybody's happy. That would be awesome. So I wish the best for you. Well, I'm hearing these nightmare stories from other people in VIX and vol world, and I really don't understand it because it's been the perfect year to make money. If you can't make money in this environment, then I don't know when you're going to for the VIX. So I hope the stories that I'm hearing are wrong of people just really not doing well. And I hope let's say this, who cares what other people are doing? As long as you and I are doing okay, then that's good, right? For trading wise. Somebody's got to lose money, I guess. All right. Thanks for watching, and I'll see you in the next one.